Hello there, it's Francis here from Generational Wealth Academy. Now, this is just a short video to explain how I trade gaps in the market and how I also use an ADR indicator, when trading the Forex market. Now, let me just basically show you what I'm going to be going through today. This is a website that tells you about the daily price range, as it were. But let's go back to the chart. Now, for those of you who are part of my trading community, I did say my target for the week was going to be 500 pips. I must say that I'm currently over 150 pips up for today alone. Today is Tuesday. I would have to go and check how much pips I did yesterday, Monday. But anyway, my target for this week is 500 pips. This is the pound CHF, and this is CHF JPY, which is currently at 29. And then this is Euro pound, which is at 25 or so. And then we have the Aussie dollar, New Zealand dollar, which is at 67. Okay, there's nothing there. Okay, so those are basically the open trades, for today so far. And that's a total of about 174 pips. I am going to be closing some of these trades perhaps after this video, or I might leave some of them on, till later. One thing I've come to learn about intraday trading, even as the name suggests, is that you basically open the trades that day and close them that day, because the price could actually reverse against you. I don't want that happening. I have a target for this week, and I'm going to be determined to meet that target. Now, when I do mark up my chart, obviously from what I've just showed you, it might appear as though I use a lot of indicators. Yes, I do use indicators, not so much, but I also do mark up my chart. And when I mark up my chart, it's because I am looking to enter trades, for the long term, for medium or long term, trades where you are targeting like, 200 pips, 300 pips, and so forth. I would have to do another video to explain that, but these are just intraday trading, and I'll be closing them today. Anyhow, let me go back to pound CHF just to show you how I trade trade gaps in the market, or gaps in prices. Gaps usually occur when one session, closes and another opens. In this example, you can see there was the close of the US session and the open of the Asian session. There was a gap in price of about 54 or 55 pips. That was huge. And usually when gaps happen like that, some traders are caught out, and caught out as in a loss, and others in profit. I was not in that trade, so it was neither profitable or a loss for me. Anyhow, let me just apply the period separators to this. So this is today, Tuesday, that's Monday, and that was Friday. So obviously, this gap happened on the Friday. It happened on the Friday, and when the market opened on the Monday, the price had gapped down. That explains why some people do not leave their trades over the weekend. Some don't even leave it overnight. They basically would just enter trades for the day and close that day. Now, one of the ways to trade gaps is basically in this particular case, as there was a gap down, because it is the case that gaps would usually always be filled at some point. Even as you can see here, there was a gap. Let me just, there was a gap between here and here, and it has been filled today, which means even though the gap happened over the weekend, the gap was not filled on Monday. It kind of like went into it, but closed below. So it has taken about 2 days for the gap to be filled. Sometimes it will take 2 days, sometimes it will take a couple of hours, sometimes a couple of days. Believe me, at other times, it could even take weeks, before the gap is filled. So if you're one of those who wants to learn who wants to try trading gaps being filled, you will basically place your buy stop. In this particular case, you place your buy stop maybe above this candle, where it opened, believing that in due course the price would go up and fill that gap. In this case, you would have placed a buy stop here somewhere, or perhaps anywhere within or just above the opening candle, and you take profit when it goes above this last candle, that closing candle on Friday. So in that case, I entered the trade here, and we're currently obviously I'm currently over 70 pips. Now I must confess that I did not trade it that way. I only entered the trade today. I only entered the trade today, Tuesday. I didn't place the buy stop because I had marked up the chart somewhere else, believing that the price was going to continue going down. But obviously we're not in control of the market, and the market has indeed decided to go the other way. Not a problem for me. I've nevertheless entered now, and I'm profiting for it. So that is basically how I would trade gaps, and one of the ways you could trade gaps. The next thing I would like to quickly discuss is, as you can see where the price is now, it's above the average daily high, ADR. So that's the average daily high, and this is the average daily low. Now, what this basically means is that this particular pair usually ranges between this level and that level on a daily basis. Now, it's an average, and obviously what that means is that sometimes it could be more. In this case, what they've chosen as the average daily high is, let's just measure it, is about 100 pips. So they are saying on average, the pound CHF, this pair, the pound CHF, trades over 100 pips. Now let's go to the website I made mention of earlier on. Let's look for pound CHF. Now pound CHF obviously here says 89 for 5 days. So the last 5 days, it's averaging about 89 pips. Last 10 days, about 98 pips. So if you go to this website, I would show you the web address shortly. You'll find the average daily range of different currency pairs. You could basically click on this, and it will show it to you in a different way. And like this, it basically shows it to you, stating the highs, the highest to the lowest. So you can see all pound pairs. I love my pound pairs. All pound pairs basically have average, very high average, ranges, as it were. There are some pairs I do not now trade most of the time because they have low ranges. I want to get a lot of pips for the day, and hence I focus on high currency pairs with high ADRs. Now let's go back here. So I would be looking to close this at some point. Obviously, I do not, focus or concentrate on just using the ADR. It's just a guide. As you can see, it's going higher, and I would say my next target would be this high. This was a low, and this is the next high. I would be expecting the price to go as high as this, to some extent, before I close it. Obviously, I would monitor it and see, what I want to do as the price begins to go that high. You can see here, this one it's not even close to the high. Let me just drag this down, and you can see it's approaching the high as well. But then you must look at structure, the structure of the price, and determine when you want to come out. Over here, you can see I haven't even used it here. I've basically used other indicators here, and I'm going to be monitoring this as well. Now, we're looking at this now. I mean, this is a trade that could have been entered by my auto trader. If you're interested in my auto trader, the pip collector, feel free to contact me. So I'm not even using the ADR there. Okay, you can see it's broken below the average low here. So it seems like I'm well on my way to making about 200 pips today. And feel free to contact me if you enjoy my videos, and feel free to subscribe on YouTube. And if you want some one-on-one mentoring, do contact me, one way or the other, and I'll let you know the details of how that works. Anyway, it's Francis here from Generational Wealth Academy. Feel free to find us on YouTube and on Facebook, and also on Telegram. Contact me. I do give a lot of trade ideas on my Telegram group and sometimes on Facebook, and obviously some free